Do you think we're searching for a bottom here, or are we just on an elevator that's about halfway down from its destination?
I think in the very short term, and we can define short term as the next couple of weeks, because January we'll deal with, when we get to January we'll deal with it then, but we are. I mean, I think yesterday when we sold off utilities, REITs, and consumer non-durables, those were the areas of safety that people were hiding out in. And once they got around to that, it tells you that it was just a lot of forced selling, whether it was margin calls, whether it was redemptions, people raising cash because they're worried about being in business. That kind of forced selling means you probably get to a short-term bottom, but I emphasize short-term.
I mean, in the past, do you remember arguing that rates were staying low for too long? And a lot of people argue that. And both sides are sort of claiming victory now. People that said that they should have been raised 2 years ago are saying that was the window of opportunity, the Druckenmillers, the Warshes, and that staying here this long is making the exit almost impossible. So,
right.
I mean, even the Journal today is saying, look,
yep.
Powell, the politics, Fed Chairman Powell, the politics will work themselves out. No one's going to second guess you if you decide not to do it tomorrow, but then say you're knuckling under to Trump. Just do what's right, and right now it is a time to pause. That's basically what the Journal's contention is right now. Do you agree with that?
Well, if you look at the data, it's easy to say pause. And because there's press conferences at every meeting next year, if they don't hike tomorrow, they could do it in January if they felt that things got better. But on the other hand, real rates are only at 0. We had a core CPI at 2.2%, and people can say, okay, that's backward looking, but real rates are only 0. So do we want to have the Fed get stuck at 2%, and then we get into a Bank of Japan situation where they sort of get trapped?
Yeah.
And just the slightest bit of tightening creates the problem, and they get stuck, and then they kowtow, and then they don't really take away all the easy. I mean, there was never going to be a free lunch here of keeping rates at 0 for 7 years and quintupling the size of your balance sheet.
We thought that we put it to bed. The Fed declared victory. They took a victory lap. Bernanke and Yellen saved the world. Are we seeing that?
Well, look at the mandate. I mean, they kind of got there, right?
Yeah,
they got to 2%
what if we
inflation. We're under 4% unemployment.
What if we can't get out? What if we have some horrific
Or what
event?
if you just bumped some things along the way of getting out? I mean, I think that you can set aside the politics, you can set aside the criticism of Powell by the president and say, when you've come into a week when the market had priced in 70% chance of the Fed going, then just not going in that respect, no matter what the reason was we were at 70%, it seems like a little bit of a panic move that they've not set the stage for. Now, look outside of what the stock market has done. Outside of the stock market, and are you getting an overwhelming sense that the data have turned in favor of, whoa, we can't handle another 0.25% right now? I don't know if that's true.
You know, if the Fed paused and we get like a 200-point bump in the futures, and then the next day they'd be down 1,000.
And then what? Right, because then you're in a market
you get what you want, and it wouldn't help.
Handle another 25 basis points at this level.
Right, and then you take it one step further, and the market says, okay, the Fed's not hiking because the data is softening. Well, what happens if it continues to soften and the Fed only has the Fed funds rate at 2 and they still have $4 trillion balance sheet? How are they going to deal with the next downturn? So Mike's point...
I was going to bring that up earlier. Sorry to interrupt, but I was going to bring that up earlier. It makes no sense to keep raising rates so you know, it's like waiting to give someone medicine. You know, you want to build up, let the flu get really bad before you give them any medicine. It just doesn't make sense to maybe cause the slowdown so that you have some dry powder to cut rates. You go up so high that, okay, I mean, you're the arson that then's, you know, giving you a suggestion how to put out the fire.
Well, that gets to the argument of if they continue to spread this out as much as they can and hope for that soft landing.
Do you think we should go up just so we have stuff to do for the next downturn?
I mean, the Fed has been going so slow. I mean, they went once in 2015, once in 2016. I mean, to go 4 times, this is considered aggressive. Greenspan was going 8 times a year. So 4 times a year. Now, I know where this ends. The odds of a soft landing are slim. Since World War II, they've only pulled it off 20% of the time. And those 3 times of the 13 was early on in an economic cycle. I mean, we can all hope for a soft landing, but the chances are very slim that they can pull this off.